Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. I last covered Medtronic in the video on the 21st of July and noted that it has entered the bullish resumption phase after bouncing higher from around the $80 mark. Medtronic has held above the neckline for 5 consecutive weeks, which is a good start. I continue to stay bullish on Medtronic, targeting 115.51. On the 28th of June, I said that Mastercard was undergoing the correction phase, and as long as the resistance trend line is not broken, this rising wedge pattern remains valid. Since then, there have been multiple tests at the support trend line which ended up mostly in rejections. This week's decline is likely the start of the bearish resumption phase, and a textbook target of the rising wedge remains at 432.4. Totalenergies still hasn't moved a lot. It is slightly higher since the last video on the 26th of July. But the reason I want to highlight this stock is price action last week again over here demonstrated another failure to hold above the 20-week simple moving average. This is the 7th time since early 2024 and continues to suggest a lack of upside strength in Totalenergies. Stay bearish on this stock due to the completion of a head and shoulder stop. The textbook target is at 45.95. I realize I've not updated on the development of Sing Ringgit since the video on 9th of June. It continues to form a bearish pattern ahead and shoulder stop. Now just to note, I am using the weekly chart. So since then there has only been 13 candlesticks, and as you can see from the chart, not a lot has happened. Sing Ringgit attempted a rebound but has continued to fail to hold above the 20-week simple moving average, and after this week, it failed to hold within the Ichimoku cloud. Both of these suggest a lack of upside strength. So the bias remains down, and I continue to see the formation of a head and shoulders top, and this bearish pattern will be completed via a weekly close below 3.2053. Moving on to new coverages, I will start with Swiss yen. I suspect that Swiss yen is forming a double top after this decline over here. Price action has failed to test the upper Bollinger so far, and the latest advance was rejected again around the same level, 186.04. Further downside, especially if Swiss yen closes below the 20-day simple moving average, or if it closes within the Ichimoku cloud, this will give me more confidence that this is indeed a bearish attempt. Closing below the support at 181.47 will complete this bearish pattern that has a textbook target at 176.88. Alternatively, rising above 186.22 will invalidate this bearish pattern. Another yen cross that may also be forming a double top is Euro Yen. It has also diverged slightly from the upper Bollinger, and the last rebound was rejected by 173.9. Closing below the 20-day simple moving average and closing within the Ichimoku cloud will give me more confidence that Euro Yen is attempting a bearish reversal. Closing below the support at 169.72 will complete this bearish pattern that has a textbook target at 165.54. Alternatively, rising above 173.91 will invalidate this bearish pattern. Moving on to Kiwi Swiss, I'm technically bullish on this cross because it has completed a falling wedge, a bullish pattern over here on the 11th of September. This bullish pattern has a textbook target at 0.4907 with risk of rejection around 0.4825. Moving on to names that I will no longer be covering in future videos, starting off with Candy Swiss, because price action broke below the support trend line of the falling wedge, so the bullish pattern is considered invalid. Dollar Thai Baht also invalidated its bullish pattern, falling wedge, on Monday, 8th of September by falling below the support trend line. I will no longer be covering Dollar Thai Baht in future videos. Last but not least, I will also cease coverage on HSBC because this week's advance broke above 102.3, which has invalidated the potential double top. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.